Let's talk about the economy, the confusing beast that dominates headlines and dinner table debates. Every day we're bombarded with news about markets rising and falling, inflation rates, and unemployment numbers. It can feel overwhelming, like trying to tune into a radio station that's full of static. But beneath all that noise, there are real stories and trends that shape our daily lives. From the price of groceries to the security of our jobs. It's easy to get lost in jargon, but understanding the basics shouldn't require a PhD. The world of finance is often made to seem mysterious, but at its core, it's about people, how we earn, spend, and save. If you've ever wondered why your paycheck doesn't stretch as far as it used to, or what those headlines about interest rates really mean, you're not alone. This week, we're cutting through the noise to break down the headlines that actually affect your wallet. We'll sift through the clutter and focus on what matters most to you, whether it's changes in the job market, shifts in consumer prices, or new government policies that could impact your finances. No jargon, no spin, just a clear look at what's really happening. We'll translate the complex terms and statistics into plain language so you can feel confident about what's going on and how it might affect you and your loved ones. We'll peek behind the curtain of those impressive-sounding statistics, exploring what they truly represent and why they matter. Numbers can be intimidating, but they tell a story, one that's often more relatable than you might think. And see what's really propping them up, or what's causing them to wobble. From the health of local businesses to the challenges faced by workers and families, we'll connect the dots between the big picture and your everyday experience. Our mission: dissect this week's key economic developments without putting you to sleep. We want to empower you with knowledge so you can make informed decisions and feel less anxious about the headlines. So buckle up. Let's make sense of the money world together. Whether you're a seasoned investor or just trying to make ends meet, we're here to guide you through the economic maze, one step at a time. First up, let's turn our attention to Canada, a country often celebrated for its stability, prosperity, and polite society. But when it comes to the economy, things aren't always as straightforward as they seem on the surface. Recent headlines have been shouting about booming growth and a surging economy, painting a picture of unstoppable progress. But if you dig a little deeper, the reality is far less exciting, and maybe even a bit concerning. The truth is, much of that so-called growth isn't coming from Canadians buying more products or services. Instead, it's largely the result of businesses stockpiling goods, filling up warehouses in anticipation of uncertain times ahead. This inventory accumulation means warehouses across the country are packed to the brim, but actual consumer demand remains disappointingly weak. Goods are sitting on shelves waiting for buyers who just aren't showing up. It's a bit like watching employees look busy at their desks, papers shuffling, keyboards clacking, but at the end of the day, not much real work is getting done. The activity is there, but the substance is missing. On top of that, there's a looming threat. New U.S. tariffs could hit Canadian exports hard, making the outlook for businesses even shakier and adding another layer of uncertainty to an already fragile situation. If Canadians don't start spending soon, or if trade tensions with the U.S. continue to escalate, the risk of a recession will only grow. The warning signs are there, even if they're easy to overlook. So, while the economic numbers might look shiny and impressive at first glance, the foundation beneath them is wobbly. Cracks are starting to show, and the stability many assume may not be as solid as it appears. In the end, sometimes those bold economic headlines are just clever disguises, masking deeper issues that deserve a closer look. It's a reminder that, in economics, there's often much more than meets the eye. Now, the U.S., land of mixed signals, where the economic story is anything but straightforward. On one hand, there are signs of slowdown, but on the other, resilience shines through. It's a place where headlines can be confusing, and the numbers don't always tell the whole story. The economy shrank a bit last quarter, but not as much as feared. While some sectors are clearly feeling the pinch, the overall contraction was milder than many experts predicted. Factories may be quieter and some investors are on edge, but the worst-case scenarios haven't materialized, at least not yet. Why? American consumers are still spending, keeping things afloat. From bustling malls to busy grocery stores, people are opening their wallets, fueling demand for goods and services. This steady stream of consumer activity is acting as a buffer, preventing a deeper downturn and giving the economy a fighting chance. But businesses are nervous. Trade fights and policy confusion make them cautious. Boardrooms are filled with uncertainty as leaders weigh the risks of new tariffs, shifting regulations, and unpredictable global markets. Many companies are holding off on big investments, waiting for clearer signals before making their next move. The OECD just lowered its U.S. growth forecast, citing these uncertainties. International observers are watching closely, and their warnings reflect the growing sense of caution that's spreading through the business world. The message is clear. The path ahead is clouded by doubt. So, while shoppers keep the party going, businesses are holding back. It's a tale of two economies, one driven by confident consumers, the other by cautious corporations. The contrast is striking, and it's shaping the outlook for the months ahead. It's a delicate balance, consumer optimism versus business anxiety. Each side influences the other, and the outcome depends on which force proves stronger. Will shoppers' confidence inspire businesses to invest, or will corporate caution dampen consumer spirits? The future could tip either way. With so many variables in play, predicting what comes next is a challenge. The economy stands at a crossroads, and every decision by consumers, businesses, and policymakers matters. For now, resilience and risk are locked in a tug of war, each pulling the economy in a different direction. The outcome remains uncertain, but one thing is clear. The story of America's economy is far from over. Zooming out, the global picture isn't much brighter. US-China trade talks loom, and their outcome could shift the world economy. If talks stall or new barriers rise, global growth could slow even more. Major organizations like the IMF and World Bank are already lowering forecasts. Protectionism and political uncertainty are fragmenting trade and raising costs. The world feels more divided, and that's rarely good for growth. So, what about the markets? Investors are jittery, and stock indexes dipped this week. Uncertainty about inflation, interest rates, and global growth has everyone on edge. For a real-world example, look at Tesla in Quebec. Sales dropped after the government cut EV incentives. It's a reminder that policy changes can quickly reshape markets, even for big players. When government support shrinks, so can demand. Markets don't operate in a vacuum. They react to every policy shift. This week, nerves ruled the day. So what's the takeaway? The economic picture is complicated, neither boom nor bust. Canada's growth is shaky, the US is holding on thanks to consumers, and global risks are rising. Trade talks and protectionism are big wildcards. Markets are uneasy, but this isn't a crisis, just a period of change. The key is to stay informed and avoid panic. Understanding the trends helps you navigate what's next. Keep questioning, and watch those numbers. They matter more than the headlines suggest.